Welcome to my new options trading YouTube channel for vertical option spreads. My name is Eric, and right now we're going to take a look at a bull call spread in Macy's as the retail sector looks to be putting in a bottom. And I have the XRT up, which is the Spider Retail ETF, and I wanted to just kind of do some quick technical, analysis here, just real basic. So you can see the retail sector basically it's been taking a beating for a while, but ultimately the sector is in a pretty large range, ranging from like the low 40s to 40 all the way up to the upper 40s with a tighter range closer between 41 and 46. And so what I'm seeing here, just from a technical reversal, knowing that we're in a large range, I'm seeing kind of a double bottom here, and then we're actually starting to clear the recent range, and that's today. The retail sector is up over 1%. This could have to do with a weaker dollar. I don't want to get into the macro side of things, but regardless, the retail sector is starting to break above the recent sort of range it's been in the last month or so. And my guess is that it can probably get up to the next resistance area, which is up here around 44 or so. So what I wanted to find is a specific stock that we could trade that would basically follow the ETF. My personal favorite of a lot of the retail stocks, maybe because I shop there, but is Macy's. And you can see Macy's has a similar pattern, although it's a little bit more choppy because it's a stock as opposed to an ETF. But again, its recent resistance is up here around 34. Now, it took a bit of a plunge here. Earnings came out, it didn't do much. But again, it's got a similar sort of double bottom pattern, if you will. I don't want to, get too labeled here, but basically, it's starting to look, similar if I zoom in a little bit, and it hasn't quite cleared its recent resistance, but if it does, if it follows the retail sector, and that's really the thesis of this, then this thing could, go a little bit higher. And so what I want to look at is a bull call spread, where basically I'm going to look at the strike price we're trading at. Right now we're trading at 29.75. I'm doing this video at a little after 10 in the morning. And basically what I want to do is buy an in the money call and sell an out of the money call. I want to straddle the strike price, and we're going to just kind of average this up to about 30. So I'm looking to buy the 29 and sell the 31. And if I can get around $1 for that, there's about a 50% chance that this thing goes higher. Now we're assuming that the retail sector is going to go higher. And what that means is with that trade, if we can find that, then our $2 spread debit spread could eventually be worth $2. Now I usually get out a little early if we get a huge spike next week for whatever reason, and you might be able to get a 40 to 50% gain, within a week or so. And you don't have to wait for the entire expiration. So it is a directional play on Macy's, but again, we're looking to follow the sector. So let's go to the option chain, and I already have it spread out to vertical spreads, and you can see that the 29.31 call spread is trading somewhere between 105 and 77. So if I click on this, the order is going to come up. You can see the mark or the middle price is somewhere around 90 cents. Okay, so first of all, I don't want to get into this today. It is options expiration this week for the monthlies, but we got one day left actually tomorrow. So I'm not going to get into this today, but I am looking to get into this if the retail sector continues it's sort of, if it can hold these levels, then I would look to get into this next week. Now, it may not be worth 90 cents next week. Maybe it's worth $1. But again, if I can get in for $1 and the stock move up above the 31 strike, that's the level we want, then this thing is going to be worth more than that. And chances are we're probably looking at realistically closer to a 40 to 50% profit if the spread can move up. If it gets anywhere up above 31, this trade's going to be profitable. If we get a spike in the next week, a spike up next week, then it would be profitable as well. Now, obviously, the opposite could happen too. The stock could actually move lower, but that's why it's such a great trade, because you can determine how many contracts you want to buy. So again, one spread is $100. So you can risk $100, you can risk $500, whatever you're comfortable with according to your account size. That's the risk you would want to take. Now, Macy's isn't the only retail stock So I'd really like to know what other retail stocks you may be watching, and if you could put them in the comments section, I'd love to reply to you there. And if you haven't done so already, go ahead and subscribe to this channel for more real-time option trading setups and strategies, and I'll talk to you soon.